Good morning. Happy Friday. Kind of a long week. Feels that way for me anyway. So I don't know that we're going anywhere today with this market. So far, it's been a pretty quiet, narrow-bodied week here. And maybe with this impeachment, blah, 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 over, maybe that opens up the door to some kind of meaningful movement here. But you can see on the weekly chart of the S&Ps, that little tiny candle body, which call it whatever you like. We don't really pay attention to names. We just recognize the fact that momentum is coming to a screeching halt here after multiple weeks moving up nicely into new all-time highs. Typical, normal, right? All the news-driven BS, right? Every day I turn on my screen, look at news, whatever, it's China positive, China this or China that or what have you. But, just looking at the charts, other than, this crazy wiggles that go on intraday, like the big collapse, and then it just goes right back up again. There's kind of a lot of overlapping bars of running in place and so on. The market had a nice move off of the October low, and it's consolidating those gains. Now, kind of interested to see, if it can hold this, right? So this is kind of our line in the sand here, this little consolidation. And I mentioned during the week that I thought that this should continue to go higher because it had this resting period of almost 2 weeks, rather than, here was the initial pop. And then it just came right back down again. So kind of put in question, whether the market would continue to go higher. But we do have to make the assumption that a trend in place will continue until it fails. And how do we measure failure? Well, breaking below an area of support that was created within the uptrend, and that would be the beginnings of a failure. However, on the weekly time frame, it really wouldn't be a big deal, right? We just prices go up within a strong trend, and look, multiple bars that never even get close to the prior week's low. So that's strength, and they constantly close above the opening price. So now it's resting, and maybe that's what will happen going into maybe next week. Maybe a little downside. I would like to see this come down into here going into the holiday, because historically that holiday is bullish and prices rally. So rallying from support would make a whole lot of sense within a weekly uptrend, right? And coming to support on the daily here. So we'll see what happens. Today I don't want to get too far ahead of what is. My thinking is that we're not going to be doing much as far as up or down here, which will be just perfect for the Friday 0 days to expiration, either put or credit spreads, or maybe even an Iron Condor here, doing both sides. So we'll assess that in a little while. All right, so why don't we just take a look at that? We see where the markets are at here, back and forth, looking at SPX, pretty much the same. You can see the hourly. We usually go to the hourly and say, okay, well, here's this support. Futures are up a little bit. We got some pretty clear, lines in the sand there. And the factory work is to then go and look and see where the premium is and which way things go in the first, 5 to 15 minutes or so. But here's the range. So down below here should hold, and up above here theoretically should hold. And this is in the middle of the range, which makes it kind of ideal for an Iron Condor play, having a pretty decent area of support below and resistance above, and current prices about in the middle of the range. So that's pretty good. All right. Same thing here, looking at the cash market, a little bit more of a range expansion and an inside bar, which means the trading was inside the high and low of the prior bar. And I'm just kind of eyeballing that. Maybe it's a peekaboo above that, but who cares? The body's on the inside there. And so when we see a pattern like this, the first thing that comes to mind to me is, well, if it breaks below, well, this week's low next week, we get the pullback, and maybe we get the pullback into Thanksgiving, and then we rally from there. So that's what we'll be keeping an eye on. Taking a peek at the spiders. We can see a little overnight stuff action there. Let's just make our adjustments. Right. So there's our support. We kind of got this level here now that was created yesterday. So we got kind of like two levels there, which suggests to me again that even if it breaks below these lows from yesterday, it's not going to go much further to the downside, right? That's the theoretical because of this support here, unless for some reason things get out of hand. Who the hell knows? But, you know, and above here, you've got this congestion up there. So again, it brings me back to the upside and the downside are relatively limited. So that Condor play should be a good vehicle to make some money today. So we'll take a look at that later on. So I think this is a good setup, especially again, since it's the middle of the range. Qs, you know, similar pattern, you know, we can move that up here a little bit. Ideally, you know, again, we've got this congestion. It's an area, and so there's our high. You've got a swing high there, and you know, this base, and I'm just adjusting my reference points there. And again, in the middle of the range, similar pattern. Weekly chart, not quite an inside bar. It made a new high, but came back in. The body is there. Where is Trader McGraw? This is Glenn. Glenn, Trader McGraw is in the green room. So the question is, why aren't you? So I was asked that in YouTube. Okay, let's look at the futures here. All right, so we looked at the S&Ps, and I'll just push this out a little bit. And this, you know, the same story. You know, we've got a larger range with prices in the middle of that larger range there. And so we can do this kind of, right? That's our kind of playground for the day, so to speak. And it's in the middle of it. So we'll say which way it goes here at the open. Qs, same story there, right? In the middle of the range, high, low, and smack in the middle there. And I don't know what happened here. I don't know if there was any news. There was some jiggles that happened about 15 minutes ago. It tried to go down and it popped back up. And again, a lot of going nowhere, running in place. Same story. Dow futures up 50 ticks here. Same story. Support, resistance, middle of the range, flip-flopping back and forth. Not expecting much. But, you know, if it can get above here, I mean, for an intraday trade, it's something I would consider. It came down here. It held W bottom, chopping. It backed off from here once. And, you know, it came down and popped up. So not the cleanest of patterns, but if it clears this, it kind of opens up the door to this void above here. And it's going to come back here to visit that. Well, not great, not great. Maybe the Dow is the better, right? This is kind of close. I like to see the alignment, unison of these different markets. Those are the best opportunities here. And we've been talking about this Russell, which has just been flatlining for over 2 weeks, just whipping back and forth here. So far, it's holding. Yesterday looked like it could crack the lows, but now it's coming up into the middle of the range. Same story with a weekly that's consolidating up near the highs here. So we're just in a holding period, right? A holding mode, waiting for things to move one way or the other, and repeating, but historically the Thanksgiving holiday period is bullish. So if this thing can get going, and just reiterating to keep it in mind that so far this is bullish price action at resistance, and this has got the biggest void up above. And if it clears this next week, there may be some fireworks to the upside here in the Russell. So keep an eye on that. And the JH doesn't have quite the void. That's the mid cap. They tend to move, but maybe that'll make new all-time highs. And you can see this is actually consolidating right above the top of the range. We've got a red bar here this week, but big deal, right? Red bar doesn't change the trend. And a red bar ignored next week would be perfect for the bullish scenario. So we'll see how that plays out. Oil doing well. There was this breakdown failure there, so that's bullish, coming up into some resistance up here, which failed from. So we'll see how it deals with that. Bonds are up here, but inside the red bar, it's up near resistance. So another pattern that I wouldn't expect much from today. And gold, it's up here a little bit. It's an interesting setup. We had discussion about this in the green room yesterday, where we've got, this kind of bull flag, which is kind of getting a little long. Right? And this is not meant to be trend lines. It's just to kind of visually point out the downward sloping channel within this really strong push up, which cleared multiple years of resistance over there. So now we've got this breakdown, right? And pretty nasty drop there, which is the big red bar right there, and possibly could be a 1, 2, 3. However, what I was thinking, right? Thinking just based on patterns, thinking isn't what is, right? But the possibility, because this is suggestive of this little rounding top here, that it could break and go lower, which kind of flies in the face of this bullish big, I'm trying to get back to, let's see, this big bullish pattern here of this breakout. And so what's going to win here? Theoretically, this could come down, and what I would think should happen is it holds this swing low. You can see, again, the big breakout and the consolidations, which this pattern suggests, well, just wait for a setup that is in alignment with that bullish bias. So what could happen, right, is that this actually red bar fails. And that's why I have this alert right here. If it gets above the high of that red bar, that's going to be the start of possibly this wide range bar being negated, which would open up the door to this void. And you might say, well, what about all of this? And I would tell you, this is pretty meaningless. The only thing that is meaningful is this as a potential stalling point, these overlapping opens and closes. But if it can get above the high of that red bar, that's going to open up the door to moving back up here. And then this pattern coming into what should be, right, a break, a significant break below here, really messes up the chart as to, well, this is going to take a lot longer to play out as to this bullishness here of this breakout that occurred, right, over a multiple year base. So continue to keep an eye on that, and we'll just see what happens. Right now, we don't have something that says to do anything. Maybe below the red bar's low, if you want to short it, to see if it goes down here or lower. That's certainly a choice. You can see the little blip over here and the push up on the hourly chart. So as it comes up into this resistance, it likely starts to chop around, and buyers and sellers try to figure out what to do with it. So we'll see. And silver kind of just churning up here, looking a little bit better, of course. And you can see how the hourly has cleared some of this resistance, but not really a big deal here, of course, with this pattern after this break. So lastly, we always look at the transports. What are they doing here? And they're doing a whole lot of nothing, like everything else, but holding up quite nicely for the moment, up at the top of the weekly range after the peekaboo above it, and coming in under the green bar. So waiting to see, can it hold? Can it get turned around? Just to reiterate, this week was a lot of running in place, right? As you can see, just going back to the weekly chart of the S&P, going nowhere. Spiders look a little different, but going nowhere. Dow, diamonds, going nowhere. Look at the cash there. A little peekaboo to a new high, an inside bar under their opening price, pulling back. So no real damage done. For the moment, we could just call it constructive consolidation within a bullish trend, and we'll see how it plays out today and, of course, into next week. So, Bitcoin, if anyone's interested, got a nasty crack here, breaking through some support. So we don't trade these futures, but certainly Bitcoin's always of an interest for the long term as to what's happening there. And I kind of fell apart. I think I read more China stuff going on related to that for whatever reason. Anyway, all the best. We'll get going in the green room. Those of you on YouTube, think about joining us in the green room, take a trial, and that's it. All yours, Dan.
All right, thanks. Good morning. Hey, Greg, check this chart out, Fitch. So it had a nice, beautiful pro gap here. Went from a downtrend,
What's the symbol?
What?
What's the symbol?
I'm showing it, Fitch.
Yeah, I know, but I have the meeting room small. I can't, my eyes aren't so good.
Yeah, FTCH, I'm showing it. So I like the pattern. It came in, buy setup, minor support. So my question to you is this one of those examples where we just arbitrarily give it a bigger stop? Do you trust this reversal is my question. We got 4 tails here.
I hate that question, Dan. Honestly, I trust everything as long as it doesn't hit my stop, but I would give
No, but we specifically in MT Live talked about certain patterns where if you don't trust the reversal in light of the overall pattern, you give it a bigger stop.
Well, I would just look, in my opinion, just because of this market environment having more jiggles, maybe call it algos, news-driven stuff, I kind of gravitate to giving things a little bit more room as a typical day-to-day thing. So, but I do love yesterday's bar breaking the prior day's low and turning into a nice green bar. So
right, all 3
that should not be violated in theory, but just the market environment is one in which if it tickled underneath it, my stop wouldn't be there, but I wouldn't like it. Let's put it that way.
Okay, so it's just going to be arbitrary.
Absolutely.
So maybe
so
878.
Okay, so here's what I would suggest doing. Yesterday's bar, whatever the range is, it's actually 3/8 of a point. Let's call it 50 cents. I would give it another arbitrary 50 cents under yesterday's low.
Okay, and my
size
swag,
for that.
My swag number of 858 is okay. Is 40 something cents under the low. All right, perfect.
Sure.
So let me give that right. I posted it to our subscribers with a
So
note.
the idea is half the shares, twice the stop. That's from right out of AMS in a situation like this. And you do that because if you get confirmation, let's say it turns into a 1, 2, 3 continuation pattern and you've got another day of consolidation, or it does break out today, well, you've got, more bullets, so to speak, to add to it once you've got, the best confirmation that you could possibly have.
Right, because let's just say it closed with a bearish engulfing bar, I sure as heck would not be looking to add to it.
No, you wouldn't add until that bearish bar was negated, of course.
Right.
But either way, right, the money management means that even if it fails, and you could decide to get out before your stop is hit. But no matter what, your loss is going to be very, let's say, acceptable to your account.
All right, cool. So that's a good discussion. Our opens, everything looks fine. And actually, it looks like we have a nice gift. Yesterday, the LRCX was a bad gift. Here we're Zoom. We bought Zoom yesterday as a core trade, and it's gapping over the high, so that's a good sign. So now I'll be tightening the stop. You know, it has room. You know, retest here of the IPO lows, a bull 1, 2, 3. This is going to be problem area, but you know, it has good risk to reward, so we're in that. Let's look at gappers first. OOMA had earnings. Trade's very sloppy, bullish gap, too big for me. I have no interest in that. Triple IV 2550, same bullish gap, but I don't like the way it trades. Light volume. MATY, can't tell what's going on. Yum. It was just on the news, maybe authorizing more share buyback or whatever, but that's very bearish. You know, bearish gap, even though it looked, you know, nice big bottoming tail, but then gave it all up. And now it's like a little descending triangle with air below. So I'm keeping that on my short watch list. I'll put him down here. Tesla, let me give that to you all. I gave Tesla a bear call. Credit spread here. Sent it out to Telegram earlier. More retail and, you know, earnings moving around this week. A lot of retail this week. 65.90, so that's a bearish gap way down here, making that a big breakout failure. And you know, that happens. And I'm working on a MT live. I always have a couple MT lives open, and that's a classic breakout failure. Someone on YouTube asking about Angie. Now this one, it's actually, hey, this is a great discussion as compared to Fitch. It's in the same ballpark of discussion. Fitch is 10 times cleaner, but you heard everything we said, hopefully. You know, this had a controlled pullback, support. We love, you know, the tail after making new lows. And Angie, it was farther away. Notice how it did not retrace to minor support. So this reversal, there was nothing. So this is one, if you bought it back here, I wouldn't have because of these big whippy tails, but I'm just saying this is a fantastic example of there is no way I would have had a stop under this, because this is exactly what it could have done. Now, am I interested in it now? The answer is no. And here's why. So this failed, you know, buyers are stepping up. So that's a good step one, but it's still not on great minor support. So what I would, and these sideways 3 bars are resistance. So I would like it to go up and then give a W bottom. Then I'm interested. Does that make sense? So that, Greg, you were talking about little videos. That would be a perfect one right there. Just talking about the concepts of gaps and reversals. Yeah, that's a good one. I'm glad you asked. Let's see, Post, where are you? I think it's earnings, but I can't tell what it's doing. Berber, recent IPO, doing really well. I can't tell what you're doing. The Shoe Carnival, little breakdown failure, range expansion. So this chart, based on yesterday's close, suggested higher prices. Gapping up here 39. We'll watch it on a pullback. Rust 113. Bullish gap, but no price void. It's a big old mess. JWN 37 bucks. Same big mess. GPS the same big mess. There's nothing there. McGraw, have you ever heard me say no pattern, no trade? There's nothing there. This one's a bullish gap. The only thing that concerns me is it's, you know, extended on the weekly and monthly, but it's acting well. You know, let's see what that does in 30 minutes. SJM, can't tell where you're opening, but that had earnings. Well, yeah, I can. So 105 area, there's no price for it. It's a mess. But it was, you know, if it can get above these highs though, McGraw, it'd be a put spread candidate. Yeah, I got Splunk in the list here, yeah. 3 more to go. Light volume gap, I can't tell. We'll come back to you. FUV. Bearish gap. Look, looks like this is just total pump and dump looking stock. And that's what you get playing with those. Splunk 136. Wow. It's a big old gap, but no pattern. This is, you know, we're going to be looking for, oh shoot, a little fix is popping pre-market here. We'll be looking to sell credit spreads that expired today, not just on spiders and SPX, but on anything. The Googles, I mean, the FANGs are our go-to stocks, but anything. I like earning stocks because they're high volatility. Orgo, gap, and it's a bearish gap, but that's a big old mess. HIB is retail. That's a big, beautiful gap. Look at the monthly. So it's gapping up 30 bucks. It has room to high 30s. You know, there's no entry right here. We need a pullback. But nice retest here. Look at this. Whoever says charts don't work, look, support, support, support. Buyers are putting their money at those prices. Breakout failure here at the high. I love this new low divergence way down here in 09. Then a little bull flag consolidation. I get excited when I look at beautiful charts. DAC. That's in pain. Wow. Postage, that's in pain. That's a big old bearish gap. Roku. Roku could be a put spread for today. He's usually high volatility. Let's keep an eye on him. EYEG looks like, I don't know if that's drug stock or whatever, but it is, the gap's too big. Bike, that's a big old gap. That's worth watching over a couple days. Someone on the YouTube's asking credit spread on Netflix. I need a little bit more information, but I'll just talk anyway. It's a bearish 50% gap. So I don't know if you're talking a call spread, a put spread, if you're talking about 0 DTE, you're talking about next week. But the answer is, as of now, if it takes out a 15-minute low, I would sell a call spread above yesterday's high that expires today. It's still bullish daily, weekly, but if it closes below 50% retracement, it suggests further downside retracement. But I wouldn't be comfortable, you know, doing a call or put spread for next week. All right, futures coming in here a little bit now. We always like chilling. Look, Tesla though. I said this is a beautiful, beautiful bearish setup. I said 15-minute low. Let's sell a call spread. Maybe we do a 5-minute low. So Pat is our resident expert in trading Tesla. And she warned us about, the event last night. I didn't watch it. All right, so Fitch now. It gapped over our entry. So I'll watch it here. And I'm just going to say hold off Fitch, and then I'll give them a better answer.